Hey, Nick Fenton here, options expert for Likefolio. Today I'm excited to talk to you about buying puts and calls and utilizing social sentiment and implied volatility to analyze and figure out when you have a really sound opportunity to do so. So first, just a quick refresher. We want to make sure we have social sentiment on our graph. So do that by going to Style, Settings, go up here to the Equities tab, and make sure that Show Social Sentiment is checked. And we've got that on there. Now we want to add Implied Volatility. To do that, here under Charts, we go to Studies, Add Study, over here to Volatility Studies, and we're going to add Imp Volatility, which is short for Implied Volatility. It's just going to give us a view of where the implied volatility has been over the past 52 weeks in this particular case, since we're looking at a one-year chart. And I also want to mention that social sentiment is only available in Thinkorswim by TD Ameritrade. So if you're not a TD Ameritrade client, I urge you to sign up, open an account today. Trust me, it's the best product out there for us options traders. Can't be beat. I've tried out several and keep coming back to TD Ameritrade. Really never leave. I just like to try other things just to make sure that I'm on the cutting edge, and I absolutely am with TD Ameritrade. Thinkorswim is the bomb, trust me. So let's talk using social sentiment and implied volatility when buying puts and calls. First, we're going to take a look at Nike here. This is a call buying opportunity, and I'm going to show you why. So Nike has essentially, seen some downside pressure. We've seen a bit of a slow trend to the downside. This thing has just kind of been slowly fading lower over the past 52 weeks, and that has accelerated a bit in the past month and a half, 2 months or so. So we've seen some downside pressure there. The stock reported earnings recently. The earnings date was September 27th, and we didn't really see much of a reaction on earnings day. A little bit of downside pressure. Since then, it's just trickled a little bit lower. Past 2 days, we've seen some downside pressure continuation. But it's really pretty slow going, nothing too alarming. First, we want to determine, is there an opportunity to buy or short? Well, in this case, I think there's a buying opportunity, and here's why. If we look at social sentiment is in the social sentiment area. If we look at sentiment, that's this orange line graph here. And you can see it's pretty choppy, but the point is to smooth it out. And what I noticed when I smooth it out visually is that there was a little bit of a downside bias. It was slowly starting to trend a bit lower overall in the sentiment area. Nothing aggressive, just a slow trickle lower, which kind of correlates with the slow trickle lower in the stock price that we had seen during that particular time period. Then all of a sudden we saw a bit of an acceleration to the downside. So it accelerated a bit as far as the decay in sentiment, and shortly after that accelerated downslope in the sentiment took place, we started to see a little bit of acceleration in the overall price decline of Nike. That's a pretty interesting observation in my opinion. Even more interesting is we're actually now starting to see a turnaround here in sentiment. And it is, as you can see, smoothing out higher. And we're starting to actually get back towards those previous highs area of like 95, 96%, which is an extremely positive sentiment. So, that bodes well for the price of Nike stock, if you ask me. So I think there's a decent argument there. Usually, I like to see something in sentiment as well as overall mentions in the positive area or the negative area. But in this particular case, there's not much of a case. It's been pretty flat here recently. In the overall positive mentions category, which is the green area of the mentions. So blue is neutral, green is positive, red is negative. As you can see, there's not a whole lot of red going on here in Nike. But there's nothing really attractive, no real attractive observations to be seen there in the green area of positive sentiments. So we have a decent case here with the uptrending sentiment, a decent case to consider being positive, maybe potentially buying some calls here. But before we really go too crazy about considering buying calls, we want to make sure the implied volatility isn't too rich to be buying premium. So the implied volatility gives you a good measurement of how rich is the volatility premium in the particular stock you're looking at's options. So as you can see here, the high end of the implied volatility over the past 52 weeks is right around here, which is around 42% implied volatility. The low end is right about here, which is, looks like around 16, 17% implied volatility. And we're currently right about here, which is about 25%. So we are definitely closer to the low end of the range than we are to the high end of the range. That tells me that there's no excessive premium. In fact, the volatility premium may actually be a bit low. It's on the lower end of the spectrum. So you want to buy premium when it's on the lower end of the spectrum. That's a positive thing. So if you're going to buy premium, you want to make sure you do it when the implied volatility is at the low end of its range over the past 52 weeks, not when it's at the high end of this range. Reason being, it's more probable that this implied volatility is going to move higher towards its mean, at least towards its mean, and possibly even above the mean being the middle end of the range. So we like to buy premium when it's at the low end of the range. We like to sell premium when it's at the high end of the range. So here we have premium at the low end of the range, which indicates it's decent decent time to consider buying premium in Nike. And then we have the social sentiment area indicating a positive trend in sentiment, which could push shares of Nike a bit higher, or at least provide some price support here, give it a little boost to the upside, which would give our calls a little increase in value. And we get a nice little bonus if that implied volatility happens to trickle higher. So we would go over here to the trade tab next and take a look at the different option chains offered here in Nike. I do want to give this observation I made in sentiment a little time to play out. I never expect social sentiment stuff to happen the next day. Something that I see in social sentiment, I don't expect it to play out, within a week or two. It's kind of more of a longer term observation. So it's a forward-looking observation. I see this happening now, which means at some point in the future, I think this is going to stabilize and turn around. I want to make sure I give it enough time to do that. I don't think I need 171 days, but 80 days seems like a pretty decent amount of time, just shy of 3 months. If it hasn't happened within 3 months, then the overall thesis is debunked. So I would take a look at the the January 2017 options. I'm looking at buying calls in Nike. So I want to make sure I'm on the calls side. The call side is right here on the left. All the puts are going to be over here on the right. And I'm going to stay, if I go back to the chart here, I really don't know exactly where the shares could go. I think it's a pretty decent opportunity for it to get back towards the 55 range, where we've seen a lot of decent congestion kind of in that area, in the 55 area. So there's a lot of interest towards this area. I could see it getting dragged back up towards that level, but I really don't know. I'd probably just be looking at some at the money calls. So let's just take a look at the 50 calls. We'd be wanting to buy the 50 calls. They're $2.02. So when we clicked on the ask for the 50 calls, it pulled up this order entries tab. And this is just going to reiterate what we're doing here. We're looking at a single buy side, 10 contracts here. You can change that to whatever you want. Let's just say 1 for now. Nike, we're looking at the Jan 2017. So that the 20 means that it's going to expire on the 20th of January 2017 calendar year. The strike price is 50. Looking at the calls, Price is $2.02. It's a limit order. It's a day order. You can choose day or GTC. The extended hour options are not offered when you're trading options like they are when you're trading stock, because there is no extended hours with options markets. Next, we can hit confirm and send, and it's going to bring up our order confirmation dialog, and it's just going to reiterate everything. It's going to tell you the break even for the stock price is 52.02, so the stock has to move up to 52.02 by expiration in order for us to even break even. So it has to go above 52.02 by expiration in order for us to make money. Now, if there's a quick move to the upside, then we'll be able to take profits quickly. But if we're talking about 80 days from now, the stock has to be above 52.02 in order for this to be a profitable trade. Anything below 52.02 in the stock price 80 days from now, and we're not going to have a profitable trade on our hands. So it tells you the max profit is infinite, max loss is $202 since we're just looking at one contract here. And it gives you the cost of including the commission, so it's telling you your commission is going to be $1.50 on this one contract trade. Buying power effect, $202. Then it just gives you the resulting buying power for stock and options. You would hit send to route that. You can go over here to the monitor tab to see it routed, and you can see it here at the top. We're going to buy one Nike, 20 Jan 17, 50 call at 202 day. Current mark is 198.5, so that basically says the market price for that is $1.98.5, and it's currently working. I'm going to get rid of these other two just for good measure. And let's move on to a put selling opportunity. So I noticed in Netflix, I see an opportunity to potentially buy some puts. Let's start with implied volatility. We mentioned that we like to buy or consider buying premium when implied volatility is at the lower end of its 52-week range, and we like to consider selling premium when it's at the high end of its range. Well, one quick glimpse at this Netflix implied volatility chart, and you can quickly see that it's definitely at the low end of its range. So the high end of its range is right around 80% here. The low end of its range is right around 30% right here. And we're currently at 35. So very close to the 52-week lows in implied volatility. So premium is super cheap right now in Netflix. Definitely be looking for a debit style strategy. Buying puts would fit the bill. So now let's make our social sentiment area a bit larger. A couple observations I made here are, first, we actually have a decent case of downtrending positive sentiment going on here. As you can see, it has been downtrending. The positive mentions, not sentiment. The positive mentions have been scaling down slowly but surely over the past few months. As far as sentiment goes, you can see here recently, we've seen a pretty steep dip initially, and it's kind of smoothed out, but it's still definitely trending lower in sentiment here. These two observations are pretty bearish. So we've got bearish observations in social sentiment. We've got implied volatility at the very low end of the range. Let's take a look at any observations on the price chart itself. Well, we had a really big move in earnings here recently. It was an upside move, so very bullish earnings. And we saw a nice continuation to the upside. Then it stalled out, and it's actually starting to die down a bit here. Why is that taking place? Possibly because we're kind of near these 52-week highs, and maybe the market's just not ready to push it above into new high territory. So the market's definitely getting skittish at these levels. And, maybe it's time for this downside pressure to get a little continuation because of this observation that we're seeing here in positive mentions, as well as the decline in overall sentiment. So I think this is a pretty strong case for bearish price action. You don't have to buy puts, but with premium this low, put buying just makes great sense in my opinion. Very cheap premium here. Definitely a debit strategy is a good opportunity. So once again, I'm sticking with 80 days. So I'm going to stick with the 20 Jan 17s because I do, even though I think this could play out a little quicker than our first example, I do want to make sure I give it plenty of time to play out. So, we're looking here. It could easily get back into this gap, and get down to the 110 area. I don't know if it's going to go all the way to 100, but it could. But I think getting back into the gap to around 110 is definitely feasible. At the very least, I think it'll get back to where the gap topped out, at the very top of the, where the gap basically, where we saw the open on the morning after the earnings report, which was right here. So that would be about 116. So at the very least, I'd see it going down to 116. At the most, 100. Middle range, 110. But again, I think I'd like to stay pretty much at the money. So what we have here are some strange strike prices. We've got a 125.71, a 122.86. And we're looking at the put side this time. So make sure we're on the right side. We're looking at puts. We're going to go with the 122.86, which are just a little bit out of the money on the put side. I don't really want to buy in the money puts, which would be these 125.71s. So I'm going to do this 122.86, buy them for $8.90. A lot more expensive than our first example, but I like the trade better. So we got order entry tools. We're looking at single. We're selling. Oops, I pressed the wrong thing. See, that's why it's beautiful to make sure you review your order entry tools. So we want to buy. I accidentally clicked the bid there, but I caught my error quickly. So we clicked buy. So we're looking at single, buy, 10. Let's change that to 1. Looking at the Netflix 20 Jan 17. Again, this means it expires on the 20th day of January, calendar year 2017. The strike is that strange strike price of 122.86. Not sure what's up with that. But, every once in a while, the strike prices do get a little squirrely. We're looking at puts here. Price on entry, 905. Going to do a limit order, day order. Confirm and send. It's going to show us our break-even stock price is 113.81. So Netflix has to dip down to 113.81 in order for this to be a successful trade on expiration. But remember, I'm expecting this to happen a little quicker. So if I don't see some continued downside pressure in the next 20 days, I'm just going to bail on this. So I'm willing to do this particular trade, even though that break-even price is almost at that, it's right just a little above the median price range, a little below my 116, where the gap opened up the next morning area that I mentioned. Max profit is 11,381. That would require Netflix going to zero, which is not going to happen. So max loss is going to be 905, just basically the amount that we're risking by buying these. If we let it go to zero in value, we would lose $905. Tells you the cost of trade. Again, reiterates your $1.50 commission, buying power effect, etc., etc. We hit send. We route it. Go over here to the monitor tab. Here it is. Tells you the date and time, single, buy, +1 to open. So we're doing one contract of Netflix, 20 Jan 17, 122.86 put. 905 is our limit price. This is currently a working order. If the order fills, it'll go down here to filled orders. If we cancel it, it'll go down here to cancel orders. But for now, it's right here in the working order area. That sums up our tutorial on looking at social sentiment and implied volatility, taking them into consideration when we're looking at buying puts or calls. We took an example of buying some calls. We took an example of buying some puts. I personally prefer the put buying example here. I think it's a really good trade opportunity. I actually may put the trade on myself tomorrow. But for now, that ends this tutorial. Hope you enjoyed it. Special pro tip alert. Visit learn.likefolio.com. We've got more Likefolio Trade School videos, all exciting, jam-packed with education, beneficial, actionable, awesome. Also going to have a special brokerage offer for you, so make sure you visit.